The tit-for-tat tariff war between the U.S. and China has taken a toll on financial markets. And despite signs of a trade truce, our next guest says words are not enough to quell investors' anxiety and appease bearish market sentiment. Ben Emmons, Medley Global Advisors Managing Director for Global Macro Strategy, is joining us now. And when you look at the tit-for-tat and the uncertainty, how do you protect yourself as an investor? Because we get mixed advice here. Some people say, go into financials. Others say, beware the financials, they're overpriced.
Right, so I think this is the issue, right? That we're having this dual market of you having stock markets at record highs, bond yields at record lows, and what's in the middle there. So I do think that that's the positioning to take, because if you look at this year so far, if you had this sort of hedge position, half risk assets, half safe assets, probably the right position to be in, given this whipsaw headline risk that we're dealing with from whether that's trade or whether that's the Brexit. Ultimately, I think the market will reconcile that position and say, the trade deal will come to an end and the Brexit will come to an end, and it looks like that we're going there, that in 2020 probably this hedge position will shift and you'll be more risk on position, I think, as opposed to being this hedge position.
What gives you that confidence? And Julian was talking to us earlier about the looming election might provide a little bit more impetus on the trade front. President Trump saying today the U.S.-China trade deal is being papered, I guess meaning they're putting it in writing. I haven't seen that paper yet. I don't think anybody has. And my natural inclination is to be a little bit skeptical. Why aren't you?
Well, I share your skepticism, because you're right. There's no paperwork, there's no forward guidance or anything. We have never had an official press conference between President Xi and President Trump, which you normally would expect in these trade negotiations, the two key heads to be at the table and discussing what this trade deal really is ultimately about. I think that's the missing link here. But it seems these baby steps towards this point that they're going to have this deal because the pressure is building on both sides. The economic data here is weakening. The economic data in China is weakening. I think this is part of the backdrop why they're moving now towards this deal as opposed to the deadlock that we went through over the summer.
So people look for leverage. We get daily reports. For instance, yesterday, I think it was Bloomberg, the Chinese may not buy the 40 to 50 billion in agriculture. They may not buy anything. Then we get the report today. The Chinese have been injecting cash into their financial system. We're going to get data later this week that shows that the Chinese economy has slowed down even more. So who has the leverage here?
Well, I think in both sides it's kind of a mixed picture here in terms of leverage, because the strength of the U.S. economy is clearly faded. We were a year ago at 4.5% real GDP. We're at 2% or less today. And China has slowed in a similar fashion, maybe somewhat less. If you actually look at the stock market performance over the past year, China is definitely ahead of the US. So investors have given maybe China a bit of the upper hand there in terms of saying, if the trade deal comes together, this will be beneficial for China because of this trade revival that we will likely see. I think particularly global trade revival will happen as on the back of this in 2020 if this deal gets together. That's just all about confidence coming back in the markets and you're seeing this depressed trade volume pick up again. That will probably be the big catalyst.
How much do you think this whole picture is about trade and tariffs themselves versus the U.S. just trying to maintain its status as the world's #1 economy and not lose out to China?
So I think what you're pointing at is the sentiment issue about it, right? Partly a political sentiment, perhaps, of this idea if we're stronger than China, we should be stronger than China. At the same time, it's investor sentiment that is really concerned about what's the complexity of this trade deal really. Because if you think about it, like we've had all these different parts of escalations over the last number of months. We get a lot of stories about the supply chain shifting. Nobody of us is an expert of the supply chain, and that's what investors do grapple with. What does it really mean? What's the opportunity here? So I think that is part of that sentiment picture, what you're alluding to, like this is the trade war is one with the tariffs having a direct impact on consumer prices, but it's the complexity of it that makes investors and others wary.
At the end of the day, what I hear you saying, what I heard Julian saying earlier, is you're optimistic that this really will get resolved. We hear criticism of phase 1, phase 2, phase 3. But that both of you think this is going to be resolved, and we could have a trend to the upside very strongly next year.
Well, from our view, the most bullish thing of the last 4 days is China has waved several yellow flags, caution flags, since the Friday photo op in the Oval Office, and the president has not tweeted aggressively against those, unlike every other time over the last year when China has done something and the president has come out and counterpunched. So that reinforces our conviction.
Yeah, that's probably true, that Trump is less active on Twitter. I mean, clearly between May 5th and August 23rd, those 5 tweets that took place by escalating the trade war through tweeting were a huge impact on financial markets and the projection of economic growth in the minds of investors. So by not doing that, we're in a little bit of a lull here. We can't completely discount the fact that Trump could come back at some point again if he's annoyed. But the point that I think is that the agricultural purchases for this trade deal that they're working out at seems to be closer than what we thought before, and I think that was the breakthrough, quote unquote, on Friday. And it's the same thing, different topic, but in the UK, and a similar kind of breakthrough is happening. You would expect this ultimately at the end of all this discussion, just like the European debt crisis ultimately was resolved by just political will and shaking hands. I think that's where we're at right now.
All right. Ben Emmons, Medley Global Advisors Managing Director for Global Macro Strategy. Good to have you here on The Move.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.